Need to switch banks? Do you need an old-fashioned bricks and mortar bank, or should you go completely online? Scott Terrio is here, and we're going to discuss it starting right now.
This is Debt Free in 30. Here's your host, Doug Hoyes.
Scott Terrio, welcome back.
Glad to be here.
So, as you know, we Canadians tend to stay with a bank for life. So, how many banks, and you're like 70 years old, I don't know how old exactly you are, but you're not as old as me, but how many banks have you banked with in your life?
2. The one I was born into and the one I married into.
There you go.
It's the Canadian story.
And that's exactly my situation as well.
Yep.
I was with a bank that was my parents' bank. And then when I got married, I moved to my wife's bank because she's the smarter one and I do
Same
what
here.
I'm told.
Yep.
So other than marriage, why do people switch banks?
Outside of what we do for a living, which is file insolvency proceedings for people, in normal life, I think people switch because they've either been put off by a bank. I've heard that a lot. Somebody, I got pissed off about how this happened or went down or whatever, or they move physically somewhere else. I have lived across Canada, east, west, middle, and there are different advantages and different types of competitors to banks in different parts of the country. Ontario is pretty big five, but you get your eyes opened when you go somewhere else. So that is possibly one reason. Marrying into a divorce, so the reverse could also be a reason. So marrying out of a bank, and people, I think, probably not. It's probably not realistic, but they think they want to just get out of that bank, right? Just I want to start clean, my own stuff, and then nobody knows anything about me. That's good. We're good to go. So I think those are the big.
Well, and what about fees? Do you think that's a motivating factor, or do they all have the same fees, so it's not really that big a deal?
I don't think it's a factor for people over a certain age. I don't think boomers will care about that much because they've been at the same bank for 50 or 60 years, and I'm not going to switch one now. I think the under X age crowd is very much aware of things like fees and that kind of thing because they get a lot of their information online, and there's a lot of discussion. When I was growing up, nobody discussed banks, and now it's like all over Reddit and YouTube and Twitter and everywhere else. And so I think younger people are more aware that there are advantages here, advantages there, disadvantages here.
Yeah, and if you've been with the same bank for 40 years, why switch now? But if you're 23 years old, well, I haven't been with the bank for 40 years. I've got much less loyalty, and I'm more likely to be switching then.
Yeah, and I also think younger people now, because of the internet, are more apt to jump to different things just because it's easy to do. No, not banking, but anything, right? Like insurance or whatever. I think it's just more. It's more the speed of the internet. World.
Yeah, well, if we're talking about an app on my phone, I can go anywhere really quickly. If we're talking about a bank branch that's across town, well, I'll probably stick with the one I'm at. Now, of course, we don't go inside banks anymore, but we'll talk about that in a minute. Now, You did make the comment at the start of this that we do insolvency stuff here at Hoyes Michaelis, and this show is called Debt Free in 30. So in the context of debt, why would someone consider switching banks?
Well, okay, so let's say a typical client of ours comes in and they owe 5 different lenders or 6 different lenders or more, and they are with a bank, one of the big 5 banks typically, and they owe money to that bank. So their paycheck is going into that bank, but they also have a Visa line of credit and maybe overdraft with that bank. In Canada, there is a rule under the Bank Act, the dusty old Bank Act, that is called the right of offset or rule of offset. And that allows banks to, if a bank is taking a loss on one account, i.e. you've stopped paying them or you've filed a proposal or bankruptcy, they're going to lose money on that account. They're going to lose however much of the principal and all the future interest. So they will seek to redress that loss by taking your next paycheck or more out of. So as soon as funds land in that other account, well, you know what? You left it in their bank. So I tell people sometimes it's like, if you owed Tony Soprano $10,000 and you left $1,000 in his truck, would you get it back? You wouldn't. not to compare big banks to a notorious gangster.
Invalid
and this within 5 minutes of me promising I would behave on this podcast.
Yes,
but that makes sense, right? Why, the bank is not going to give you that money that's yours when you owe them $20,000 over here.
Right. So. That's exactly the common scenario. I've got a line of credit or a credit card with the bank. I stop making the payments on it, but I've got $1,000 in my bank account. Well, it's really easy for them to just take it.
They're just going to put a red flag on that account. Yeah. And this is something that is not well known at all. Like, we go through this with every client we meet. So in a week's time, I could go through 20 clients and tell them this stuff. Some of them are bankers. Some of them are tellers at banks and have been for 20 some years and don't know about this. So it's not a widely known thing at all.
Yep. And our standard advice for everyone who is filing an insolvency, a consumer proposal or a bankruptcy is open a new bank account at a new bank.
Because if you don't, and I've only ever had in 12 years doing this, I've had one client who didn't do it. She told me she was going to, but she didn't. And it was a very elderly woman in Brampton. And she then had $3,000 taken from her bank that she owed money to because she couldn't pull the trigger on changing the bank.
Because she's been there for 40 years.
She told me she was gonna. I had her swear it, and she didn't. And then she changed like the next day after that, obviously. So it can be bad.
Yep. And so it's just that's what we tell people.
And it's business. The bank is just doing it because Yeah,
and it's not even something malicious or malevolent.
No.
The bank
it's automated.
Yeah, it's automated. It's all in the computer.
No one even does it.
Right. So physically. You've got a line of credit with the bank. Your payment comes out on the 12th of every month. Yeah. It's going to just keep coming out. And so people go, well, but I filed my consumer proposal on the 10th.
Yeah.
Yeah, well, the bank can't update their records that quickly. It can take them a week or two or months or longer. So before you file an insolvency, brand new account, that's where your money goes. Then there's nothing for them to take. So that's the debt reason. Let's think through.
Just along a banking line, I wanted to add, that's usually the most important emotional discussion we have. Mm-hmm. It's not filing a bankruptcy and a proposal. Like, people have already thought all this over and laid awake at night. By the time they come to us, it's not an emotional event generally. It's nuts and bolts. It's what do you owe? What do we do? It's when you get to the banking changeover that there's a pause.
I've got to do that.
Here we go. Here comes the banking discussion. So that is my point about this, is how ingrained banking is in this country.
Yep. Yeah. And if I'm having a half-hour meeting with someone up front, 5 minutes of it at least is going to be talking about banking.
For sure. Because it's usually at the end.
Yeah.
Because you don't want to talk. You're not bringing that up until they've kind of decided they're going to do something, because it's premature, right? But if they said, "Yeah, this is great, we're going to do a proposal," you say, "Okay, now we got to have a discussion about the bank." And you're right. It's like a third of the discussion.
Yeah. And it's here's why. Here's what can happen. The old lady story.
Always tell the old lady story.
And it's. She didn't do anything wrong, but the money was there and they took it. So let's go through. I have on my cue cards here, for those watching at home, a list of factors that people think about when they're deciding to switch banks, and more specifically, what bank should I pick? So I want to go through each of these, and I want you to give me your thoughts on it. So first question I always ask people is, how do you get paid? Why am I asking that question?
Because you either get direct deposit into your bank from your payroll department of your job, or you get a paper check. Okay, so if you get direct deposit, the money's going in there automatically. And so if you are concerned, and the right of offset can be triggered, you don't have to file an insolvency. You just have to owe them money, and after a certain time, they're going to start to offset their loss because you haven't paid them, you haven't contacted them, whatever. So the point is, if you get paid electronically, you're going to have to get your new bank info to your payroll person before your next pay. And usually there's a cutoff of a week or so. So like, if you're getting paid this Friday, it's not going to work. But if you're getting paid further down the line, it will. If you're getting a physical check, you can put that anywhere you want.
But with a physical check, when I go to my brand new bank and try to deposit it, they're going to say, "Oh, sorry, you're a new client. You're a new customer. We're putting a 10-day hold on it."
That can very well happen. Yes.
And so you got to be conscious of, how do I get paid? And you're right. Electronically, there's the time lag, and you're right. Payroll is generally processed 3 or 4 days before payroll.
Yeah.
So you got to get it to them in advance. But once the change is made, so long as the payroll person enters the account numbers correctly, you're good. But with a paper check, I go to the bank and they say, "Oh, sorry, you're a brand new client."
Yeah.
You definitely don't want to have a brand new bank account and deposit your paper check at the machine.
Right.
Because then you're almost for sure it's going to be 10 days before it clears. So I always
go to a payday lender.
That's right. No, sorry, that's incorrect.
Some of these thoughts are in my head.
We'll
and some
edit
of them
that
are
out. Do not go to a payday lender. But you know what? You
could.
And people do, because they know if I go to the bank, it's going to be 10 days before I get the money.
And that is exactly why I said that. Yep. Because if that paycheck is all you've got for the next 2 weeks, you're not putting it in that cash machine, because it's going to be gone and on hold. Yep. And people that we meet do go do that, because I gotta
buy
money,
groceries
right?
today.
I have
what
to
am
have
I
money.
supposed to do? So they go to the payday lender. They get their check cashed right away, paying a huge fee, of course.
Yeah, and then once you break the seal on going into a payday lender,
you never go once.
Well, yeah, exactly. You're probably going to different ones, but once you've done it once, the barrier is gone.
So we're going to skip ahead to the practical advice section, and I'm going to tell people what I tell everybody. If you get paid by paper check because you work for a company that has 3 employees and they don't have it all set up automatically, then if I had one bank to pick, and I would pick the bank my employer banks at. Because then I can go into the teller and I can say, yes, I know I just opened this account 2 weeks ago, but look, it's drawn on this bank. Yeah. Can you please just go in and make sure the money's there and give me the money?
It's in-house.
It's in-house.
Yeah.
And as a result, the vast majority of the time, here you go.
Because between banks, like any reason for a bank to over-securitize or something, they will do it.
So if you don't bank at that bank and want to switch to them and you don't have any debts with them, then that would be my first choice, even if you're going to be ending up paying more in fees. So that's the first question we always ask. How do you get paid? Because that'll help determine what bank you should go with. Now, the next question is, do you need an in-person bank? Do you need a bricks and mortar bank? And this was certainly a thing back before 2020 and COVID hit, when we all went to banks. Most of us don't go to banks anymore or anywhere. Why would I need an in-person bank? What kind of services can I get better at an in-person bank than I can get at a online bank?
Well, things like money orders, wire transfers, that kind of, where there's like a physical process that has to happen. I like to think about, like, I don't think anybody needs an in-person bank. I haven't been to one in I don't know how long, and I'm not super young. Most people we meet that are under, 40, they've never been in a bank. It's just a different mindset. Now, with small businesses, you and I were talking about this before we get started, big deal, because you're dealing with large sums of money, oftentimes cash. Most banks, not most banks, but certainly some banks, branches are set up where there is one line for commercial and there's 4 tellers for people, for consumers. And it's great because you get in that line and it's always the same teller. Or usually it is. And so they know your business, they know the score, they know how this works, and it's quick and it's efficient. So that, I think small business is a huge deal to stick to online. But for the most part, online, I think, is the way to go.
Yeah, I think for most people. Yeah, if I run, a gas station, a restaurant, some business that generates cash, it's a lot easier to go in and give it to a teller. Kind of hard to doing that at a machine.
It's cheaper.
Yeah.
You're not paying for bricks and mortar. The online bank is set up to be competitive against bricks and mortar.
Yeah.
Right?
So I think the question you got to ask yourself is, what do I need a physical bank for? So if you are someone who routinely sends wire transfers, which is the most archaic way to send money, but there are cases where,
I'll tell you what, in Toronto, it's a big deal.
Yep. You gotta use it.
The communities that, like, the communities of people who are from somewhere else, which is entirely what Toronto's made up of, pretty much. But a lot of them, where the home country is a lot more poor, they send money every month.
Yep.
Like, I've learned this over the years, like, it's a big deal. And,
now a lot of that can be done by an Interac e-transfer. We're not talking about that. We're talking about an actual wire transfer. Yeah. The other case would be, maybe I'm, buying a house, or I'm making an investment, but that gets back to your point about businesses where sending a wire transfer would be a thing. Or I need foreign funds. I got to get some euro dollars or something. Yeah. There are a lot of banks now that have a machine that dispenses U.S. cash, but harder to get the others. So
Bitcoin.
Yeah, Bitcoin. Well, and that is the answer to everything. You can send $1 billion in Bitcoin around the country in 10 seconds. So that's what we all recommend. Payday lenders and Bitcoin with Scott Terrio. So
keep it here, folks.
Yeah, keep it here for bad advice. So the other reason, maybe this is something that skews older as opposed to younger, is I just like to deal with someone in person.
Yeah, and I get that too. The few times I've been in a branch in the last few years, and it's few, it's generally older people, but there are some younger people in there as well. So I don't think it's gone yet. I think it will be. I think it will be, because I've spoken to someone who's very, very senior at one of the big 5 banks recently, and he said they're talking about it. Like there's meetings going on about what happens when the boomers are gone, because that was the whole base of the banking system, was you did all exactly that. You walked in, and the difference then is that George knew you, or Janet knew you,
right?
And that doesn't happen in branches now. You if you get a teller, that's all you're getting.
Yeah, you're right. If there were 5 tellers in my branch and I was in every week to deposit my paycheck, I was going to get one of those 5.
And George was probably going to stick his head out of the office and go, "Hey, Doug, how's your dad? Is he over his sciatica?"
Exactly.
That doesn't happen now.
Yep. And so now it's like, well, that's why I went in there for the personal touch. And now that they've got, I never know who I'm going to see. It's always going to be someone different. That becomes less of a factor. So I think if you're sitting there saying, well, I really like my bank, that's great. But obviously it's changing. And COVID was a great excuse for them to close branches temporarily.
Or effectively close them, like one person working.
Well, I was at one to use the machine last week, and the whole branch is blocked off with a table. You can't get it. Now, there were people there, so I guess if I had an appointment to deal with my investments or something, I could have got
maximum amount of people in at a time and stuff like that.
But they're certainly making it more difficult.
Every time you pick up one of these, it's less reason to use a branch.
Yep. Because I can do it all there.
I can be walking down the street and do almost any banking I need to do. So
what about, I want to be at a bank to establish a relationship with them now, so that 10 years from now, 3 years from now, whatever it is, when I want to buy a house, get a mortgage, I will have already built up a reputation with them. Is that a good reason to stay with a bank?
No.
Because,
do you want more than that?
Yes. Give me more than that. Why do you not like that idea?
I don't think that's how mortgage lending works anymore. I don't know if it ever even did. Mortgage lending is a series of, this credit report, you got the down payment or whatever. And it's not automated, because mortgage brokers are really good at what they do. Or even bank mortgage agents as well. But I don't think that helps you. Like, okay, your history is in-house with us. But if your history was, if you're getting a mortgage with Royal and your history's with TD,
they can still look at your credit report.
Yeah, well, as long as your history is good, it doesn't matter if it's in-house, right? In fact, it may be better to be coming because you're new. And anytime you're new at a bank is when they love you.
Treat you better. And that's pretty much every business.
Did I just bash banks again?
You did. You did.
Well, not even half.
But I think that's true of every business, that they tend to pay more attention to acquire a new customer.
I used to work for John Deere, and if you brought a red combine in, they loved you. And then, of course, all the green guys were like, "Oh, I've been with you for 30 years."
Yeah.
But
we know you're going to be with me again.
Yes.
So we're talking Massey Ferguson, Massey Harris.
I was thinking Case, but I think you're much older.
Okay, yes, I'm going back to the 30s here.
One thing I wanted to circle back on as a term from the corporate world that I didn't mention earlier: payday lenders often have access to your bank account. So even if you're not filing an insolvency proceeding with us and you have a bunch of payday loans, I often tell people who aren't going to file with me that you might want to change banks, because how about if I just switch the account? Well, but then the problem is you get a fast-talking payday lender guy phone up the bank and go, "Oh, Doug's got a payday loan with us, eh?" And then, they might give them the money. He's thinking, "Oh, well, it's just a different account. Here you go." Like, that's actually happened. I've heard that happen. So it's safer with payday loans to also switch banks just in case.
Yeah, because when you get a payday loan, they say, "Okay, give us your void check. We'll take the payment out in 2 weeks."
And then if you owe them money,
they've got access to it.
Yeah, and they're not the sweetest, gentlest lenders on earth. So you got to think something's going to happen.
Yeah.
Right? So
it's just something to avoid if you can.
Yeah.
I mean, I think another reason people look at different banks is the different services they offer. For the most part, every bank is the same. They got a checking account, a savings account, whatever. Yeah. But there are some banks that will offer, on their app, a free credit report that maybe another bank doesn't have. So, okay, if you want to obsess over your credit reports, which you and I are not a fan of, I guess that would be a reason for switching.
Yeah. I like the idea of a traditional bank's online presence version. Like Tangerine is Scotia, Simply is CIBC. That's where I tend to send people. Like I don't tell them where to bank, but I say, well, look, if you bank at Tangerine or Simply, you get all the benefits of no fees, and you can still use the ATMs for the parent bank.
Yep.
And people really like that, especially people under a certain age. I think that's a big
Well,
thing.
so let's talk about that then. We've talked about why I would pick a certain bank, and you've said that there are a lot of reasons to use a virtual bank. What are some of the advantages of a virtual bank?
Saving substantially on fees. You're not paying for the bricks and mortar for the employees, all that stuff. And the savings are decent. It's not like they're negligible. But if you never go into a branch, I don't see why you would pay a bank to never go into their branch. It just doesn't, to me, that doesn't make sense. I mean, if the online bank is set up, it's streamlined. It's just what you need. Right? You're not paying for anybody else's stuff. Yeah. You're pretty much just paying to transfer money. Your payroll deposit goes in there. You pay bills automatically. Maybe you fund your investment account with it or something. But you can do all those things with an online bank. And I like that you can still piggyback off of the parent bank's ATMs without any $3 charges.
Yeah, so
that adds up.
Yeah, and I think lower fees is probably the most common reason that everybody gives
save
us.
Some money, yeah.
Save money, and then you're right, it's 24/7. They've got the app. You can do everything.
Yep.
I mean, in terms of disadvantages, I guess we already hit on most of these. If you need to get out cash, which is becoming less and less a thing, like you use your debit card for everything
pretty much,
now.
Yeah.
But if you are banking in your example at Tangerine, which is owned by Scotia, well, I can go to the Scotia machine and get my cash out. So,
I had I lost a bank card a few months ago and learned a lot. So the bank, I won't say which bank, but Big Five Bank said, okay, come into the branch, we'll give you a temporary. Okay, so you sign it. But what you have to do is, until your card arrives, you can only withdraw cash from that bank's bank accounts or ATMs. Mm-hmm. So at a store, you can't do anything.
Yeah.
So I walked around I was like some guy from Florida walking around with $500 a wad of cash in my pocket. And it made me realize how little cash I ever touch.
Yep.
Like I never have cash ever because I felt weird because and during a shutdown when you're giving people cash, they're like,
weird. What are you?
Well, in one place, I went to a bookstore, they wouldn't take it. So I'm like, because I was picking up a book that I had ordered for my son.
Straight talk on your money, probably.
Yes, it was. So I'm picking up a book for my son, and I couldn't get it.
Yeah.
I went home and Sarah's like, "Where's the book?"
Well, in the store, it's like, okay, you're the only person who's going to pay cash today. So now at the end of the day, we got to go to the bank and deposit it.
Yeah, they don't want
just use your card and be done with it.
And I didn't want it either. I didn't want cash.
Yeah.
I didn't want it at all, but that was what I had to do until my card arrived.
You think about it, it used to be, when did I used to use cash? Well, I guess if you're somebody who goes to a coffee shop, it's $2, I give them a toonie. But now I can tap my card way quicker than I can pull cash out of my wallet.
And even pot is legal now, so you're not even paying your drug dealer anymore.
No, because you can go right to the store. This will be the third thing we got to edit from the podcast. So okay, the disadvantages of online, we already talked about that. Working with a lot of cash might be a little harder. If you need things like money orders or bank drafts, you can still get a money order from an online bank, but you have to order it and then they ship it to you. And there are banks that can get it to you by the end of the day or tomorrow, but it is coming in a courier. You got to be there to receive it. It's not as easy as just going into a bank and getting it.
Yeah.
So if you've got one of those crazy landlords who says you have to pay me by a money order every month, then an online bank may not be optimal. Obviously, we talked about the personal touch. If you don't have a great internet connection or you're using data a lot, then I don't think that's a thing for most people. But that's an issue. We talked about the advantages of the bricks and mortar bank, particularly if you're a business person, makes it a lot easier, the personal touch, the ATMs and everything. And I think we talked about the disadvantages, the fees, and not as convenient. Now, let's talk about specific banks. So, and before I do, I'm going to read the disclaimer prepared by our lawyers. This information is for educational purposes only. It is not financial advice, and we are not recommending any of the banks we discussed today. We don't receive a commission or a referral fee from any of these banks, so this is just for information only. Every client of Hoyes Michaelis is given access to our research on banks. I'll put a link in the show notes on YouTube where you can see each bank that we list, and here's what services they offer. Here's what their service charges are in that. So the key question is, which banks, and you've already, I think, mentioned them, don't have fees? If that's my number one thing, I want the cheapest possible alternative. Who am I going to go with?
Tangerine and Simply. And I think that was Scotia and CIBC respectively's way of, getting more competitive, right?
Yeah.
Attracting maybe younger people or people who had been, through other banks and had hard times or insolvencies or whatever.
Yeah, and Tangerine used to be ING Direct.
Yes,
they got bought by
Started life
Scotiabank.
as Save Your Money, ING.
Yep.
Which everybody liked that guy.
Yep.
The Dutch guy. And then they became Tangerine and Scotia bought them and that's their price fighter, I guess. I would kind of wish all 5 banks had one. I have no horse in this game. When I recommend a bank to somebody like Tangerine or Simply, it's exactly because of the no fees.
Yep.
If RBC had one, I would say, hey, all 5 of them have one. Take your pick. If you like blue, go with RBC. If you like red,
here's the
like
other
there's
one,
for me, there's no specific direction to any bank. I just want to give somebody the most competitive thing they can, and they tend to really like when we tell them that.
Yeah, and that's why we just present the facts and they can make their decision. Yeah. I know there's people watching this who are going to say, oh, you didn't mention the credit unions. No, we didn't, mainly because there's a lot of them. And yes, I know that some of them have the no fee options and things like that.
And I've had clients go to various credit unions. I'm in Toronto, so it's easier. There's more of them. And there's nothing wrong with them. It's just that, there's so many and they're small and there's just too numerous to really go through all of them.
Again, do your own research. If you need a physical presence and there's only one branch of the credit union over here and you work over there, then it's less convenient. Obviously, a bigger bank is less of an issue. And there are limitations when we say no service charges. That means they aren't charging you a service charge every month for having an account.
Yeah.
And there are lots of the big banks that do charge you $20 just for having an account, but there are limitations to it. So Simply, for example, and we're recording this in October of 2021. So if you're watching this in the future, things may be completely different, but Simply does offer free checks. Tangerine offers the first 50 checks for free, and then it's a bucket check after that. Yep. The credit unions have different rules. They may change that as time goes on. So if you have to write a check.
They have changed it.
Yeah, actually,
they do. Every year there's a bit of a different alteration.
So you got to be keeping an eye on it. If you need checks because that's how you pay your landlord, then okay, well, I guess with Tangerine, I get 50 of them for free. That'll last me for 50 months. Maybe I'm okay. But that's something to factor into it. There are also banks that offer free credit reports. Mm-hmm. So Bank of Nova Scotia, Royal Bank, BMO, CIBC, I think it's only on their mobile app, but maybe their credit score only. What are your thoughts on all of that?
Oh, I got thoughts on that.
Oh, I know you do.
You knew that. Okay, so the only places I recommend people get their credit reports is from the horse's mouth, TransUnion and Equifax directly, because everything else is filtered, watered down, changed,
out of date,
summary, or it's specific to what that bank wants it to be. Because you don't just have one credit report; you have a whole bunch of them. Okay, you got TransUnion and Equifax, which are often very different because we look at them both every day, and then each of the banks within each of those two credit reporting agencies has their own parameters and their own internal reports anyway. So your report isn't even what the bank is seeing anyways. We've been over this before, but it still floors people when you hear this stuff. You should only ever go, in other words, to minimize all of that confusion and noise, you should just get your credit reports from TransUnion and Equifax directly.
Yep. And I totally agree with that. And I will plug.
And I'm including Credit Karma and Borrowell in here with all of this stuff. The same thing. Just go to the source.
Yep. And I know that those services are convenient and they're free and they're right on my phone and I can check it every 10 minutes, but they tend not to, they're not a complete report.
No,
and they
they're a summary version.
Yeah, the summary version. They don't have everything on it, and they tend to be out of date. So I agree. I would not be switching banks just so I could get access to a free credit report. That would not be the primary reason.
No.
Sure, if you're at a bank that offers them, you can take a look at them. But if something looks wonky, get the right from the horse's mouth. So, and I agree. Don't obsess over your credit reports, and I will put in the plug for our credit rebuilding course, which is available for free, courses@hoys.com. We talk about all this kind of stuff.
Check it once a year because you can't fix it any faster than that anyway. Yeah,
I mean, checking it every 10 minutes seems kind of pointless to me. So do you recommend having more than one bank account? I mean, and I'm not talking about a checking and a savings account. That kind of makes sense to me.
More than one bank, you mean?
More than one bank.
I don't see why. You've got 2 different apps that you have to use, 2 different passwords. If you want to do transfers between accounts, it's between banks, which complicates things further. Maybe there are delays, charges, whatever. I would keep it all in one. Ideally, you have, as I said before, if a nice big 5 bank offers an online one, well, okay, you could have your mortgage with CIBC and your bank account with Simply. It's the same bank.
Yeah.
Or Scotia and Tangerine.
Well, what if I have my bank account at TD and my mortgage at Royal Bank?
That's fine too. It's especially good if you're planning on missing mortgage payments.
Yeah, that's right. Yeah. You'll lose your house, but it's not a big deal for them to be taking the payments out of a different account.
In fact, it's not a big deal at all. It's insignificant.
Yep. Yeah. And
like mortgage lenders don't care where the payment comes from. They do not care. Because I have clients ask, the reason you're asking me these questions is because they're client driven. Clients ask me that all the time. Like,
my car loan's
someone
over
with
here.
A car loan or a mortgage is filing a proposal. Well, what do I do with those? It doesn't matter, right?
Yep.
Like as long as they're getting paid,
they're happy.
You're fine. And it's a secured debt. So even if you put your Visa line of credit, whatever, in the proposal or bankruptcy, you're still fine because it's a secured debt. It's not
and even if you're using the insurance company that's from your old bank, TD Insurance, for example, and I'm sure everyone watching this has already seen our show on credit scores in the insurance industry, which you and I did with Maureen a little while ago. You can still keep your insurance with that company if you want and just switch it to another bank.
It's not a bill. It's a bill. It's a bill payment. Yeah, exactly.
So I guess the counter argument to that would be, well, if there's ever some catastrophic failure and the bank machine goes down or something, it's nice to have a second bank. We do have a lot of clients who will have an account at a bricks and mortar bank, but then also have a secondary account at an online bank. I'm not going to take any position one way or the other because you've kind of hit on the key point that it's the more you got to manage, the more you're likely to mess something up.
I think so. For all the times there's a catastrophic failure at a bank, they got it fixed like, I mean, they got lots of fixes for that because they don't want it happening.
Right.
I just think the complexity of having all your various monies at two different banks far outweighs the once in a moon catastrophe.
You did give us the example of I needed a new card and I couldn't buy a book because they didn't accept cash. Well, I guess if you had a secondary account at another bank with a couple of bucks in it.
But that was also COVID too, right? They're not taking cash because we're in a generational event here. I mean, even then I could have used cash anywhere. Yeah. But right now they're just a little reluctant to have, why physically dirty money
So I guess, again, look at your own situation and decide what makes sense for you. And in terms of at my same bank, does it make sense in your mind to have a checking and a savings account? Or
I think so. And I realize that savings accounts, I mean, with interest rates the way they are, you're not really saving anything other than what you're putting in virtually. But what I do tell people though, and this is again back to we deal with people who are in financial trouble, you can have a portion of your paycheck or every second paycheck directed to a second account to build savings so that you don't feel the pain, right? Mm-hmm. So in other words, every second paycheck, I'm going to have 10% sent into my my savings account. All my money comes in and out of my checking account. That's my functional account. But in a year, you will be surprised how much money you have in there. And you didn't see it. And if you have the discipline not to use it, having it come off is like having tax come off. You just don't feel the pain. So that I like having a second account for.
Yeah, it's out of sight, out of mind.
That's the main reason. And you do get, I have people who tell me, because we say, well, you got to take discipline, right? Because you have $600 in there, but you can't use it for anything. And they, after a while, they really don't want to use it.
Yep.
Because
I've built it up.
They've invested so much time and effort into not touching it that they don't want to break that seal. So it actually ends up turning your mind around the other way.
And that might be the reason to have an online bank account in addition to your main one. That's where my savings go. It's on a separate, debit card.
Same bank.
Well, you could certainly have an account.
You don't have to, but I'm back to why not?
It's complex. Yeah.
Because then, well, we've talked about it.
You could certainly say to the bank, I only want my checking account on my debit card, not my savings account. That makes it a little harder for me to get at the money. I've actually got to go in and make the transfer.
Yep.
So
if you learn nothing else from this podcast, folks, that one was good.
That's the one. So I think ultimately you've got to decide for yourself what works. So any final advice you have for anyone on anything to do with banks, bricks and mortar versus virtual?
No, banks are a service. Do not get wedded to a bank, or if you're already wedded to a bank, don't feel like you need to continue it. We all got handed a bank as Canadians. My folks dealt with CIBC. That's where I ended up with my little bank book when I was 12, whatever. I switched with marriage, yes, but there's no reason to banking is a service, and think of it openly like that, right? You can bank anywhere that makes the most sense for you. And it's not as much of a pain in the ass to change it as you think, because I tell people to do it every day. And again, we get back to that point in the discussion where it's like, there's a pause. And I'm like, oh, no, here we go. And the person demonstrates obvious reluctance to be doing it, but they all do it.
Yep.
And they all generally comment later that it wasn't too bad and it was worth doing. And
it's a one-time thing. Once you've switched, you've switched. So, okay, you got to prove your identity. You got to do this, you got to do that, but then you're done.
And you get your bills changed over and all that stuff. Yep. There's that to do too. But once you do it, you're laughing. I think it's much easier to do. Keep an open mind about banking.
Yep, I agree. It's a service. I think you got to prioritize what's important for you. Do I really need a physical branch? Do I want savings? What's the big thing?
And one closing thing is, I think banks, the big 5 banks in Canada decades ago, had identities, right? Certain things about them were like TD was the one that was open the longest, and they were the most consumer friendly because Charles Bailey was their CEO at the time, and he was from a branch background, which is unusual in CEOs. But each of them had a thing, and they don't anymore. They are commoditized at this point, frankly. Nothing wrong with, I'm not bashing all big 5 banks. I'm just saying it is a service, it is relatively flat. They can only offer so many different things. And so therefore don't get yourself tied in knots about, this is the bank that does this.
Yeah, I think you're right. Do what's right for you. Go through the points that we talked about today. What's important, pick the right bank, and don't be afraid to switch. You don't have to stay with the same bank for 40 years.
Nope.
It's not a thing. Well, there you go. So I will put notes on YouTube in the show notes for everything we've talked about today. But I think, that's my concluding comment, that do what's right for you. You don't have to do what's right for anybody else. So if you do that, you should be good.
And the bank is not your friend when it comes down to business things like that, right? The rule of offset. Just remember, they're not going to not do that just because you've been with them a long time.
Yeah, it's a business relationship.
It is, absolutely.
And so treat it as such, and you should be fine. Scott Terrio, thanks very much for being here today.
Thank you, Doug.
That is our show for today. So again, full show notes on on YouTube. We talked about our credit rebuilding course that talks about credit scores. You can go to courses.hoys.com. It's free to get that. And I'll put links as well to our banking pages that we give to all of our clients so they can help evaluate which bank is right for them. You should make the same decision. That is our show. Until next week, thanks for listening. I'm Doug Hoys. That was Debt Free in 30. Or 37.